think of any card. You got one?
I got one.
What's the card?
The King of Hearts.
The King of Hearts. Not the Queen of Spades?
The
The King of Hearts?
Okay. Cool.
The King of Hearts?
Yes.
Now here's your question.
Okay.
How many Bitcoins does it take to get some goddamn respect in this town?
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having an all right day today. Yesterday was a pretty brutal day all around for basically all markets. It seemed like there was no one that was safe. The crypto markets as a whole, you could see in 7 days, really the majority of the gains with the exception of a few coins that are in the green. But if we look in this column right here, almost all those gains for the most part got wiped away, right? And we do have the halving coming up. Now, there are some people that are panicking right now. There are some things happening as far as the sticky CPI that came out. And then, of course, you have the markets assuming maybe now there may not be as many rate cuts or even a rate hike, right? And what would that do to the overall markets? And is Bitcoin mature enough to actually be able to overcome that, right? If we did see a massive drawdown on the S&P. So there is a lot of people that are freaked out over this, right? I mean, if we have a look realistically at what's in front of us right now, we are still in a constructive pattern. I mean, you know, this is, you could say this could break either way. It could break to the downside. It could break to the upside. We have given plenty of targets to the lower end. I mean, worst case scenario, we do have this parallel channel that we had formed, right? So, you know, maybe there is that sell the news event and we do come down here. But, you know, ultimately, as long as you're staying basically above this trend, above that $50,000 area, there's not really too much to worry about, right? But what I wanted to talk about today was sort of the implications of where Bitcoin could be going, because truthfully, if you had asked me, you know, a few months ago where we would have been around the halving, I would have said, well, based on history, we would have been somewhere in the 40,000s, maybe 50,000s, but yet we put in a new all-time high. And that's making people think that maybe the halving is in fact priced in and that it will be a sell the news event. Now, remember, the ETF was a sell the news event, right? We had a 20% correction only to then kind of like get everyone off sides and go to the all-time high anyway, right? So if just I could hop in and have a look super quick. I do want to talk about the charts, but I also want to talk about where we could be going and also just the fact that sometimes you need to zoom out and look at the bigger picture. And I do have a very serious message at the end of this video that I do want to say to everybody, but I will hold that off until the end of the video. But, you know, right here you could see we have still had this constructive pattern. In fact, you know, we were in this parallel channel, and now the top of that channel has been acting as our support, right? Where it was our resistance. So we are slowly stepping up. Now, this doesn't mean that we can't go up forever. I mean, gold couldn't even protect itself, right, from that scare that we had yesterday all throughout the markets. But again, I'm not going to go through every indicator. There is nothing right now that is saying that we're at the bottom. It's not saying we're early. We're not early anymore. That's a fact. But the charts are not saying that this is it. It's all over. It's ending. It's saying that we're getting close. We're kind of almost at the 50% mark, maybe moving into the 60% mark, right? But the craziest part, the most insane part of the markets is really that last little sliver. And that's like the stories that you hear about with altcoins just going 1000Xs and all that, right? That's not happening just yet. Yeah, we've seen altcoins, some of them do quite well. Obviously, this week, a lot of the gains got washed away. That was universally across the board. I mean, unless you got lucky and just picked like the 1 or 2 coins that somehow were in the green this week. But for the most part, we're kind of seeing that flush out of the leverage, the flush out of, you know, maybe the short-term speculators as well. And, you know, again, we're still just, and this is an opinion that I've had for a very long time, that this area that we've been dancing around, this 0.236 is where I believe we would have gone last cycle. And when we zoom in here, you could see we never made it. We never made it, that extra little push. And again, I think it was because of the FTX debacle and all the bad news with all these leveraged firms just going under and doing terrible things with customer funds, right? But I digress from that. So forward thinking, before we get into the immediate of realistically, are we setting up for a correction right now? Are we setting up for a 40%, 50% correction right now? Or do we have a little bit more to go? Because I still think you're going to see that correction at some point. So it's almost one of those things where you kind of don't want it to happen, but You wouldn't mind if it happened sooner than later, right? Because getting it out of the way now potentially could be more healthy. But as we could see, right, and this was an alert. Yeah, see, this is a 1 hour alert. So don't take this. This is a very, you got to get in, got to get out. Do not take this by the time you're seeing this video. But yeah, I have these alerts set on the 1 hour. But anyway, I wanted to just go over to this video that we have. And this guy right here is Salam. His name is Salam Ismail, right? And he was over on the Moonshots show. So this is the broader picture. Before we get into like the little, what could happen in the next week or month, you know, this is where you hear about these crazy $1 million plus Bitcoin price predictions, right? And given the current market conditions, it sounds crazy. It sounds crazy, right? And it might even be crazy. But when you hear him actually break this down, and I want to start with the positive, because I want you to know that this isn't a bearish video necessarily. It's more of a realistic video. But just listen to what he has to say and understand how it can escalate quicker than most are anticipating.
You know, I have watched Bitcoin go from 5 cents to 50 cents to $5 to $50 to $500 to
Why didn't you tell me back then?
You know, even because you kind of look at it and go, this is absurd. It was 5 cents a year ago. Now it's 50 cents. Do you buy? Right? Like, you don't know when it hits. And I get the similar conversation where friends of mine say, hey, you know Elon a bit, you must have invested in Tesla. And I'm like, no, because every quarter for 5 years, it looked like he was about to run out of money. So it's a very hard call. I finally put in a chunk at 500, but even not enough. I think this is the tipping point. This is the singularity for fiat currencies. I think we move to this new model now, and I don't think how it goes across it. Yeah, and I think this one nails it.
Yeah, so it's, Bitcoin ETFs now hold nearly 4% of all Bitcoin, and it's institutions, and then after institutions, governments. We're beyond.
Here's a stat that I remember. If 1% of the Fortune 100 put 1% of their treasury into Bitcoin, that gets Bitcoin to $1 million of Bitcoin.
So where could it go? I mean, Cathie Wood's prediction was it'll be at $1 million or higher within the next 4 or 5 years. And it could get there a lot sooner. Could get to 5 million. Pretty soon we'll be thinking about Satoshis in the tens and hundreds of dollars.
I don't think there's any limit. Look, there's about 500 trillion worth of wealth in the world. And I don't see why Bitcoin can't represent more and more of that.
Not to mention some other news, we do have Hong Kong regulators possibly going to be approving a spot Bitcoin ETF as early as Monday. So this is going to allow these Chinese investors, because yes, it's not legal in mainland China, but Hong Kong, being the financial district, is a place in which they could get involved, right? So they're saying that they're not expecting inflows to be as big as the US, but then again, when you consider how many people there are in China, it does open the doors to just more allocation, more exposure to Bitcoin as an asset class. And, seeing something like Hong Kong, kind of being that, not officially China, right? But the fact that Chinese citizens could, get involved, it's only a matter of time until you get that global adoption, right? So that was kind of like the bullish scenario, right? Which is why I believe that long-term Bitcoin is just going to literally just continue to surprise all the naysayers and the haters, right? But what I did want to do is I did have a special guest that I wanted to bring on the channel, Max from MDX Crypto. Now, I know I've been doing a little bit more of these interviews lately, but truthfully, I feel like I talk a lot on this channel, and sometimes it's good to get a broader perspective from somebody totally different. Now, Max has been in this space longer than I have. He's got about a year on me in this space. He's a very successful trader. He mostly just trades, actually, for the most part. But I wanted to bring him on this channel to get more of like a level-headed approach to potentially where we could be going, where we're heading short term, and just basically what he's looking at in the broader market. So I hope you guys enjoy this. Just so you know, sometimes Max, he has a little bit of a colorful vocabulary. So I've chose not to I've chosen not to censor this because I think, you know, people should be able to speak as they want. So without further ado, guys, let's dive in. All right, Max, it has been a long time. In fact, you've never actually been on the channel before, but we've known each other for a while. Met you back in Dubai years ago. Really cool dude. You know, we hit it off. And one thing I liked about you is your sort of level-headed approach to the markets, the way that you would analyze the charts. And considering a lot of people on my channel, you know, they listen to my analysis every day. Of course, I have my opinions, but I like to get other people's perspective on just to kind of see where we're going, if things are aligning. You know, right now we have the issue where there's sort of this fear going around about like potential wars and stuff, and maybe the inflation data wasn't exactly what the US was anticipating. So now it's kind of trickling into the markets. And what's weird is, you know, we're pretty bullish on Bitcoin. I think Bitcoin is setting up for a massive rally throughout the end of the year. But specifically this week, we're seeing the S&P, for example, closing below a very important level. Gold, which you would think would be the flight to safety, quality, whatever, that took a hit. So did Bitcoin, but Bitcoin's still holding up in the range. So a lot of really confusing different things going on right now. What is your opinion on the markets? Like, what are you seeing right now for Bitcoin currently? Maybe even in the short term leading into the halving, you know, we could talk a little bit more about the lengthening cycles, but just in general, just what are you seeing right now in the charts?
Yeah, I thought you were going to introduce me by saying what you liked about me was my mustache, but you went straight into the trading, mate. That happened to me a few times. I to be honest, mate, you went into a lot of things in what you just said. Actually, you spoke about SPX, you spoke about gold, you spoke about inflation data, about wars, all these things. There's so many things you spoke about. It'll probably take me a while to go through it. So what I'll try and do is I'll give the analysis on just what the charts are telling me on Bitcoin. We can look at some of the macro data and look at what's going on. And I do think, yes, if there's a war, like the Iran thing is quite worrying, actually. I do, you know, when the US government starts saying there's going to be something with Iran, it is going to cause some sort of fearful event, which can happen. But I always say, look, black swan events we can't predict, so just have a stop loss, right? Your stop loss is your get out of jail free card. Have a stop loss in your trades. You have a level which you're prepared to sell, or whether it's the other way around, and then just have that in your mind as your line in the sand. But with Bitcoin, you made a very good point about gold. Gold should be the thing, the flight to safety. I still don't look at gold as this being anything too significant on terms of the lower time frames to say, okay, gold's now over. I would say, like, if you're really looking for like some sort of price action or some sort of, you know, quantifiable evidence to say that gold is topped, you really want to be losing the prior range. And at the moment, it hasn't done that. So if it comes back up, you get a lower high, that could be a sign. Breaking through here would be the line in the sand for me for gold. And yeah, we probably have finished this uptrend. But again, on the long term, I think gold's going to go much higher, considering that US dollars are being printed like they are. But that's kind of macro. So with Bitcoin, you know, I do see with Bitcoin that there is a potential chance here for maybe a breakdown of trend. But like I said to you before the stream, mate, I said, look, there's a couple of levels you want to look at. It's actually not on here right now, but I'll just draw a line here. Very simple. And a line here. It's like a pennant formation, okay? And look, the real level you want to hold is here, where we found support on trend and also this horizontal support level, okay? This is the line in the sand for the bulls, okay? If we lose this, I do think that that's the first shot across the bow for Bitcoin. I do think Bitcoin will go to $61,100. That will be the next area. So say it does something like this, comes back down. We hit this as support again, maybe get another thing. It could be some sort of descending formation for a while. If you break through here, I do think we get a stop off at this level here. Then if you lose this, you're not looking to short directly into it. You're looking to wait for the retest trade. And the retest trade will look like this. I don't know why my line's on there right now, but it was a second ago. This level is super crucial. If you break through it, okay, and you get something like this, some sort of descending formation, if you come to it and break through it, what you're looking for is to short the retest of it, okay? That's really where you want to get into that logical SR trade, okay? You want to get into something with good risk to reward. Selling into it as resistance is better than just saying, okay, I'm going to play the breakout. And we all know what happened with the breakout trading. I actually did a tweet. I'll quickly show you, actually, mate. I'll bring my Twitter up. So you see this tweet here. This is actually the formation which you're in at the moment. Everyone's talking about it. Everyone's trying to buy the breakout either or. And what I was saying is it's probably better actually to sell into the breakout when everybody's buying and then look to buy the support when everybody's selling, okay? And if you look at that, it's pretty much happened exactly on point. Let me just refresh my chart a second because I don't know why my lines aren't showing up, sir, for our live video. But yeah, you can see here that, yeah, look at the similarities between these two charts. You've got the pennant, the sell. That's what, for me and my strategy, I'd be looking to sell Bitcoin actually as a short trade. And you can see how that correlated very nicely. We had the breakout of this pennant here, you see? That's where the sell was, back down. And now we're coming to this level here. And you can see I've got this thing called auto charting tools on, which kind of shows you these blue areas. What you want to look for is this level here. That's where the buy is. And actually, we wicked into it pretty beautifully. And that's exactly where the buy is. Okay, so that's how I trade. I do SR trading. I don't really look at the formations of the chart as much as the levels on the chart. And that's how a lot of guys get hurt for the breakout stuff.
Well, actually, I'm actually in the similar camp as you. I don't like doing the breakouts or breakdowns either, because if you actually just look at every single touch on this chart, you would have got completely chopped up if you had taken that trade either way. You know what I mean? So,
I completely agree.
So, I mean, so I don't want everyone that's watching thinking like we're getting bearish here, because I mean, if we do end up having, for example, a breakdown, because here's the thing, we haven't really seen a massive sell-off like we had usually been used to in the past. And it seems like that volatility is actually minimizing. For example, if you had gone back to the 2017 cycle, for example, you were seeing a lot of 40% drawdowns, with a lot of high 30s. And then if we go to last cycle, they were more just casual 30s. Whereas now we haven't really seen anything more major than a 20% breakdown. So, in your opinion right now, it may be too soon to tell, is this kind of that moment where you think we're due for like that 30% breakdown? Or do you think that there's more continuation and then, we go to a higher level and then that's when we get the big 30%? Or maybe we don't get that at all this time. Maybe we don't get it at all.
You bring up some crystal ball points. And I would say this, nobody knows, okay? Nobody knows exactly when it's going to break. All I do is I try and make my analysis as objective as possible and say, all I'm going to do is look at charts. Like we said, what's gold doing? What's the CPI data? What's happening with the war? None of that's quantifiable, and we can't really predict or trade on the basis of those types of events, okay, which we don't control. All we can control is what we can see on the chart, right? And I think you make a good point. Nobody knows. I do think on my channel that I have a hunch that we are going to get around between 20 and 40% correction during the halving period. Actually, the halving happens in a couple of days. I think it's in the 3 days. So I've said for months, I think during halving, we're going to have a lull phase and go down a little bit, but I'm not trading on the basis of that. Just by going, okay, the halving's here, now I'm going to short. No, what I need to wait for is some sort of market structure. So this level here, if we lose it here, this is around $65,200. That's the first line in the sand. And if we lose $61,000, then I do think that the probability of a 40% correction, up to a 40% correction, increases. And I do think Bitcoin will go to 52 is the first logical area of support. You can see here that on $52,000, we have visual support where the price stopped, essentially as resistance, SR. But I actually think it'll go lower than that. I think it'll wick through it. Long-short ratio will get probably over-exacerbated. Everybody will start shorting. The market will probably go further than most people think. Between 48 and 42 in this range, I do think Bitcoin will go to, if this is the top, but there is nothing guaranteed. And we can't be the Gareth Soloways of this world. We can't just short all the way up an uptrend. That goes against the principles of being a trader. We have to go with the trend. We're the fly on the back of a horse. We have to go with the direction of the horse. We're not trying to change the horse's direction. We want to go with the trend. So I am. Yeah,
and I mean, if you just zoom out, I mean, realistically, we're obviously just playing devil's advocate here, since there is a lot of fear. Maybe some people are in the space for the first time; they've never really had this type of volatility. So but I mean, really, just looking at what we're doing, we're forming a pennant formation in a parabolic uptrend that has been putting in higher highs and higher lows. So I mean, eventually someone's going to be right, and someone's going to say, "See, I told you, we broke down." But realistically, the overall trend, if you zoom out far enough, there's nothing really on the charts that's showing me that, we could lose a little bit of momentum. We can have a cool off period, but there's nothing that's saying that, okay, guys, that's it. Pack up the bags. I mean, I would be shocked if that was it. That was the whole rally. I'd be so disappointed. It would be the most pathetic Bitcoin rally we've ever seen. So
it's been pretty juicy, brother. I do look at this. It's been juicy as fuck. This is very, very good. And this is faster to get to our all-time high on Bitcoin than ever in previous cycles. We've never beaten the all-time high before the halving in any cycle. So I do think there's a lot of over-exacerbation here. And that does come down to, the Bitcoin treasuries. I speak about this a lot. 12.267% of all Bitcoin is now owned by ETFs, countries, public companies, private companies, and BTC mining companies. So that's a number which it is different this time. I don't like to use that phrase because obviously there's a stigma to it, but there is a quantifiable piece of data here which says that in the prior cycle, 5% was under institutional management. Now 12.5 almost percent is under institutional management. So the supply and demand shock thing is really, really interesting. And I do think it's going to go much higher than people think this cycle, actually. I think this cycle is going to be higher than most people think. This cycle, 21, was lower than most people thought. I think we're going to go higher than most people think in this one. And I think between let's just say this, and I know people, this isn't sexy, but this is the truth, okay? Nobody knows where it's going to go, but between here and $100,000, I think the probability of Bitcoin going down 40% at some point is very high, even if this is the top now. It could be, if we lose 65,200, 61,100, this is it. We come down to here, we base off. And Zombie, I was saying to you before stream, I do think this would be the most healthy market environment for Bitcoin. I do think this is very, very parabolic. I'm not saying the market has to do what's healthy because, the market could do whatever the fuck it wants. I'm just saying that this would be healthy because it would get rid of those leverage positions, get the long to short ratio back, get the momentum indicators back, and give the market some time to breathe for all the people who missed this rally to say, fuck it, I want to jump in now and be the springboard for the next move higher. And I do think that if it did it now, I'd be happy with that. I'd be looking to buy, just to be very clear. 42, 52, 48, and 42 are 100% buys for bounce trades. Probability of getting a bounce here, bounce here, bounce here, very high. I did that at 30K, I did that 25K, I did all the way up at 48 and 42. And I would say that actually very likely going to get a bounce trade. But I'm not saying it's going to happen. I'm just saying that if it is the top 42 to 52 areas, likely. And then between here and here,
there is that theory though, right? That max pain is up, right? Because there are a lot of people, like you said, that have been either shorting all the way up, or they're in disbelief, or they're calling the Amazon triple top. I don't know if you've ever seen.
The max pain right now, like the quantifiable data right now, is that this is on Binance. So this is retail traders on Binance. Let me just zoom in on this for your users because I think they might find it interesting, right? So this is only retail traders on Binance. So it's taking out the top 30 traders, which skew the numbers a lot because the top 30 traders are going to get it more right than they're going to get it wrong. So actually only 33% of the market is short right now on Binance, which is the highest liquidity exchange, not in open interest, but it's got 22% of the market. Open interest is on Binance right now. CME has overtaken that. That's another indicator that the market is maturing. Actually, Bitcoin's getting much more mature because the CME is now the predominant exchange where open interest is laying at. But it's only 33% of retail are short right now. So 66.7% are long. This is an indicator I use. And I would say that I would like to see it 70% short for the max pain to be up. And that's by going by the numbers. Okay. Yes, but there are some obviously going to be offside positions. The Gareth Soloways of the world are carrying on shorting this all the way up. But I would say that, look, Ivy said this for a while. I do think we're getting close. I look at the CBBI. This is 8 or 9 indicators in one index. This went to 82. And we were talking about this again, Zombie. You said that in this cycle here, I'll zoom in on it so your users can see it. We had this up move, and then we had this cyclical bear market move within the bull market. Okay, so a cyclical bear trend within the bull market, and the CBBI had a peak of 87, but then it made another peak of 90 to 100. I do think we're getting something like that in this cycle. I do think we've got this big move, cyclical bear move down, and then a much bigger move to the upside. Not every time has to be exactly the same. Markets do not do the same thing over and over again. Obviously, we know that. Human psychology and human emotions, and they're chaotic markets. But I would say the CBBI is at 82. We just had the halving. The long to short ratio isn't in favor of the longs. I do think we're getting close to some sort of pullback. And I did say during halving would be a good point for it because it's a buy the rumor, sell the news essentially. But like I said, we don't bet against it. Wait for structure changes first. But I'm long until proven otherwise, which I always say on my channel, because there is nothing to go against us right now. We're still above all the relevant levels. We haven't even lost the first level of support, okay? So long until proven otherwise, you lose this level, probability increases, stack, SR trade, flip your bias when the levels are lost, and then don't trade on the basis of a change of behavior. Trade on the basis of a change of structure. And that's how you're going to get yourself into these nice trades.
Sure. So based on the, you're showing me the open interest, which really a lot of the traders on Binance, I guess they would lump into the category of retail. Sure, there's probably some big whales and stuff, but it's most likely not the institutions. So and one thing that I have noticed is if you just look at the OI in general, it's been lower, I feel now, than we've seen in the past in some of these crazy moments, which could suggest that, retail is not in yet. So again, using the dangerous words, is this time different? When you have the ETF and you have these very different sector of buyers that, they're not doing what we're doing. Like we're looking at charts, we're analyzing charts. A lot of these guys, they're not really doing that. They're calling up their guy on the phone and they're just saying, hey, give me like 2 to 3% allocation and hold that for 5 years or something like that. So, and yes, I mean, you could sell ETFs too. I'm not saying ETFs you only buy and hold forever, but I mean, I think they're relatively early and there's still a lot, there's still a lot of these guys that are not even in yet. You know, they can't even start allocating to their clients yet. They need more data. They need more time, right? And they still have to go through more of a process. So, you know, I don't know. Like I said, it is a very interesting point where you have these data points from the past. But again, you know, if we went based off of solely what happened previously, we would be wrong, because we never went below a previous all-time high. We never went below the 200 weekly, but we did. We've never had an all-time high before the halving, but we did. So there's something really unique about this particular cycle. So the way that you had presented, and the same thing that I had mentioned with that sort of, you know, mid-cycle and then that big correction, I think would actually, that would throw everybody off, because I've noticed there's like 3 theories right now that are floating around. The first theory is shortened cycle. We're going to top out sometime the end of this year, and that's going to catch everyone off guard. Then there's another theory where we're going to have a super cycle, and we just go up and up and up and up, and everybody's just happy for like the next decade. And then there's the standard 4-year. Well, that one would kind of throw a wrench in the gear, because then you'd have the people doing the shortened theory saying, see, I told you, right? And then, you know, people are selling out of their positions essentially for a loss, because they're like, well, that's it. I screwed up. I missed it. Only to then, as soon as everybody walks away, stops paying attention, reverse and then do a 200-300% move, and then you know, we get up to some of those higher levels. I don't really know. I mean, so I know you're very like you're very statistical. You know, I just like to kind of.
So what you just said, it's. I don't want to cut you off, but it's the thing is about all these things. Everyone's going to have an opinion on this. Like, I think it's going to be a high cycle, a low cycle. What we can only really do is, as traders, or let's say analysts, because you said that your game in analyzing the market's getting much clearer as you do it for more and more in time. But it usually comes down to the basis of numbers, not the basis of feelings, because feelings come and go. And also, everyone's got an opinion on this, but it's not quantifiable. So all you can say is like, Bitcoin might go to 1 million, or it might go to 100K, right? Who knows? But just trade on the basis of, if it's going up, you're long until proven otherwise, and have levels in the sand, have criteria saying that line for me, this level for me is where I'm going to sell, this is where I'm going to buy. And that's the only thing you can do, because we can say Iran's going to have a war, Israel's going to do this, Ukraine, nuclear thing, that the miners are selling, the ETFs are buying. It's not quantifiable. It's all noise. It doesn't help you. Just look at the charts.
So from a statistical standpoint, then, just numbers, is there something like, do you have a time frame? Do you have certain potential price targets for this? Or you're just kind of waiting for these indicators are you, like the CBBI, are you just kind of waiting to get that signal? Or do you have like certain levels that you have in your mind already?
Yeah, so this is a really good question, actually, because, you know, I always try and make it statistical, but there are levels I do have in my mind, which are either visual, or let's just say, when Bitcoin goes to $100,000, I think it's very likely we get resistance because of the number change. And that historically, when Bitcoin puts a new digit onto its price, you do get some volatility. But there's a caveat to this prediction, okay? And I do think Bitcoin, if the world stays how it is, no one knows what's going to happen to the world, but if the world stays how it is today, and there's not a new world order event or a currency collapse or a war or the miners start doing this or that, if the world stays relatively simple, I actually do think that Bitcoin could go to around the $280,000 mark, okay? Going by the numbers of Fibonacci extensions, it's just roughly speaking got it right multiple times in most cycles. The issue, and I'm saying this with a caveat, because this would be normal world, 280K, we go into a bear market, fine. But there are some factors which are slightly different in this market cycle, because everyone's looking at this regression line here saying, oh yeah, but no, there's diminishing returns in Bitcoin. But this cycle, we have a new bandwidth player. And that bandwidth player, like you said, is the ETFs. So I think Bitcoin actually is going to do something slightly more than the typical Fibonacci extension levels you look at of the 280K at its cycle top. I think if Bitcoin's going to do something which is going to shock the world, it's going to be this cycle. I think the ETF inflows are very positive. I don't think they change the price action day to day as much as people think. Most price action is determined by the derivatives market. Looking at the volume numbers, like, you know, this is quantifiable numbers as well for you. You know, if you look at the exchanges, you know, Binance is doing $111 billion derivatives volume per day. You calculate all these, it's $300 billion of derivatives volume happening per day. That's where the price action is predominantly being discovered, okay? Because the ETFs are not doing anything close to that. But the ETFs do cause the potential, they're going to cause a potential moment where if the ETF buyers, the BlackRocks, the ARKs, and the guys who are going to the custodians to buy Bitcoin, if they start demanding more than the custodians have on their books, the Coinbases, the BitGos, and the guys who are behind the desk are going to have to be forced to go to market to buy, creating a crazy liquidity squeeze like we've never seen before, or it will be essentially there won't be enough out there to get, and it's just going to do something crazy. And I do think.
Well, I mean, we're already seeing that though. We're seeing, there used to be about 12% about a month ago on exchanges. Now we're down to 11%. And you could, if you check out like the Glassnode charts, they show that. Yeah. Plus, obviously, the halving, the distribution, will start. Obviously, it will get cut in half. So I do believe that we are in for some form of a supply shock. So I guess basically to kind of summarize, you're optimistically cautious. It's not out of the cards to have a correction, but you still maintain longer term, broader bullish sentiment on this market. And there is a potential 100%. To overshoot those levels even higher than most people would anticipate. So basically buckle up is what you're saying. It's about to get crazy.
All you can do is this. And this is if you speak to any professional, I've been trading for many, many years, speak to a professional trader. The only thing you can do in this market is be long until proven otherwise. You need to have a level which is your proven otherwise level. You stick with the trend. And I would say don't even try and time the top. Don't try and time the top. Just go with it. And then if you don't try and time the top, it means that you will always give yourself the potential to live the whole market cycle. So it's always going to go to the top, your bag. But when you're not trying to time the top, you will lose probably between 10 and 30% of the top. But I say this, sacrifice the top 20, 30% of the top to allow your bags to do the whole market cycle and then wait for something like this. So let's just say this is the top. Bitcoin rallies up, it then flushes down. You've missed the top, but you've managed to, all your bags went with it. Wait for a retest of the high and use a very basic, I'll make it really simple. I won't make it complicated because there's lots of other things you can look at, but just draw a Fibonacci from the high to the low. And if you get between the 618 and 786, look for a head short position, sell some of your portfolio, use leverage correctly, go on an exchange and say, fuck it, I don't want to sell my spot bags. I'd rather take a 1% loss at the high if I get stopped out and short. Use leverage and use derivatives and use futures in the way they should be used. And usually the best way to use them is with shorting the market. You don't want to sell your 10 Bitcoin, for instance. You want to put 1 Bitcoin on an exchange so then you can sell the equivalent amount of 10 Bitcoin on the exchange with a stop loss at 1%, lose 1% of that principal. If it does continue, then you've only lost a small amount in comparison to your spot. You don't buy and sell on leverage and jump into it. Just use it the way it should be used and use it for shorting predominantly to hedge against your exposure and let the market cycle run, because I reckon we're in for something big in this cycle, man. I really do think that
that's really good advice, actually, because like we said the same thing when people were trying to time the bottoms, especially Bitcoin for me is different. I'm okay accumulating knowing I'm not at the bottom, and I'll accumulate down and I'll accumulate up, because Bitcoin for me is like DCA. Totally separate than crypto.
You just love it. Yeah.
But like I remember, we were talking about a lot of Bitcoin for the past year and a half, right? And I barely mentioned altcoins. And just recently we have started talking about them. But the reason that I've shifted into speaking about altcoins is because it didn't make sense to keep trying to time the bottom of these altcoins. First of all, a lot of them had come out in the previous cycle. And if you were around in 2017, 2018, 99% of the ones that were in that cycle, they died. Okay. So I'm not trying to guess what the narratives are going to be for the next cycle, but we have narratives now, whether it be BRC or whether it be AI, all these, exactly. So there is actually those things you can be looking at. And I told people, sure, you can try to dollar cost average into this random altcoin in the bear market, but the same way that you're saying, okay, maybe you missed the 20% of the top on the Bitcoin or the altcoin run, I was saying stop wasting your money on the flip side on the bottom. All you need to do is catch that middle. And I believe that, even if we have this correction that you're talking about, which honestly, I would have thought that by now, truthfully, we would have had one. So I kind of agree with you. We might be a little overheated, but it doesn't mean you can't go more. I mean, the markets can go farther than anyone thinks. But, right now, exactly. So I love that strategy, and I'm in the same camp. When we get that sort of blow off or whatever it is, we come down, we retest that Fibonacci level, you're putting in a lower high. That's usually a sign that, okay, you can hold the tops all the way up. But
let me show you something. Let's put this, let's do some altcoins in a second. We'll do some altcoins. I know you want to talk about some altcoins, but let's just do this.
I'm sure everyone wants to hear that.
Yeah, think about this. Like, I'll make this strategy I'm saying, let the market run. Let's just put it on the charts right now. Let's not think about hindsight. Let's think about the charts right now. You can do it right now. You can literally say to yourself, okay, look, imagine if this is the top of the bull market. I think it's very unlikely, but imagine if this was the top of the bull market, okay? How are you going to actually apply what I'm saying? The levels are defined. This level is the break of structure. Here is the high. We come to here, you rally up, you get the lower high. There could even be a trade there. But I would say this, you lose a significant amount. You're like, oh shit, I missed it. What you're going to get is you're going to get something like that. You're going to get a relief back. And then what you do is you draw a Fibonacci on this from the high to the low, comes in at the 618. If it goes anything higher than that, you're looking even better shorts. If it comes into this and even higher, sometimes you can get these crazy wicks back up. That's when you look for the short, 1% stop loss, bang in. You've still got your spot. Then you have the potential chance for this to go into some sort of descending formation and break down. And I'll show you another example. Hindsight, obviously, I try to use as little hindsight as possible for the people I try and mentor or train or speak about or family members. I just try and use as little hindsight and just say, this is why you could do it on the chart right now. Look at this one. This is a great example. We had this great high. I know it's hindsight, but it came down and we got that move. We got that beautiful move back to the high. You're not always going to get it, and sometimes you'll get burned. But look, it came perfectly into that Fibonacci pocket for the retest. This is only one way of doing it, the Fibs. Very powerful, very simple. Anyone can do it. There are other things you can look at as well to give you more pinpoint entries on that. But I'm saying that you've got this. If you were like the Gareth Soloways of the world, I always mention his name because he's famous for shorting all the way up. If you were like, okay, I'm going to time the top short. Okay, I'm going to time the top short. Okay, I'm going to time the top short. I'm going to time the top. All of these attempts, essentially, you're servicing the open short position. You're getting stopped out. You're not going with the trend. You're losing money on the way up. Ridiculous. Just let your bags fucking run and buy and buy and buy and win 5 trades instead of losing 5 trades. And then when you win the 5 trades, lose the last fucking trade. Just lose the last one. You buy here, it goes against you. And then you get the retest. You know what you're doing. And then you go into the bear market. So I'd say humble yourself. You don't need to know where the top is. Just stop even thinking about the top. Just go with the market. We're not here to be like, I'm right. One of my phrases, I don't know if you know it, is most people would rather be right than rich. Because if they just didn't want to be right and they flipped their bias and had no ego and went with the trend, they would have more money. They would be richer. But they don't want to do that. They just want to keep, no, it's going to go down. It's going to go down. I need to be right. I know where the top is. Just fuck all that shit.
Okay, so you're more open to mention people. I don't want to mention people because I don't do that. But there is someone that I know personally.
I'm calling them out, bro.
There is someone who I know who has a channel who is claiming that this entire rally has been a bear market rally. So I don't know how you can even word it that.
It doesn't make any sense. It doesn't. Okay, I'll tell you just quickly. I don't want to take too long in this video because we want to keep it brief. But I'm saying a bear market rally is defined like this. Okay, let me just quickly show you. So this here is a very, very good example of a bear market rally because a bear market rally is a rally that hasn't broken out of the prior high yet. Okay, because it's a bear market. The first rally which takes you to the next resistance is the rally to the next resistance, which is the previous high. No break of structure. So there's a change of behavior here, but no break of structure. When you come out of a bear market rally, it's when you change behavior. The structure, you've had the nuke, you're essentially doing bear market territory. You've then had the bear market rally, which has come to resistance beautifully at $30,000. You've had higher lows the whole way up. So bear market rally is this. The moment the bear market rally was over is when we rallied to $30,000 resistance. And then we made a higher low above the prior area of the high there. That's the moment. And that's when everyone started shorting. You ended the bear market rally here. And then everyone started shorting here. Nope. This is now time for a up phase. And look what we've got. Absolutely beautiful to see. It amazes me how quickly it's happened, but it is on the charts. It's a great.
If you had asked me based on the previous cycles, I would have said we should have been somewhere in the 40s.
Here. Yeah, I would completely agree with what you said. Yeah, I think 48K, I think that was the logical place for Bitcoin to stop. Maybe come back in a little bit lower. At the end of the day, it did stop with the ETF, the buy the rumor, sell the news of the ETF. It did stop, but I was expecting something more like that, maybe back in and, a few more months of rounding off. But that is fueled by over-exacerbated, lots of supply being taken off the books, lots of short positions as well, because everyone was shorting all the way up here. Everyone had their stop loss here. And a lot of this move here, everyone had their stop loss above this wick. So, because a lot of guys don't mention this, but most price action is determined by derivatives at the moment. And that means that a lot of this buying pressure isn't people pressing the green button. It's actually people being forced from their short to buy, right? So everyone's got their stop loss here. It's just a massive push of everyone getting stopped, liquidations, and then that kind of forces I call it the domino effect. the market goes on its own fucking journey, and you can get crazy moves. And like I've seen markets do crazy shit, like COVID, like back in the China pump. We had the whole crash of the SPX. We had gold after the fucking 10-year Trump period of. So there's lots of things can do crazy shit. But anyway, it's exciting, man.
Yeah. All right. So I guess that's pretty well rounded. Hopefully everybody watching, I don't know. There was a lot to take. There was a lot to take in there. There was some maybe scary elements for some people that might be new. But I think at the end of the day, the reality is you're right. Nobody knows what's going to happen. I wish we could be Nostradamus, but we're not. But at the end of the day, I think really, like you said, the trend is your friend. And most likely, this thing is not over yet. And there's a lot more to come. And as I've been saying is, again, nobody knows where it's going to go, but I've been looking at it as just like buy the dip season. So not only have I continued to, buy the dips for Bitcoin, but I've also been buying the altcoins as well. And I think I just saw you pull up a chart. I'm assuming that's where we're going next.
I'll bring it up in a second.
Yeah, so I know for a fact that, you and me are kind of in the same camp, right? And mostly we've just been dealing with technicals and Bitcoin and fundamentals. But recently I noticed you've even started talking about it. And I know you're not the kind of guy, you're not like a meme coin guy. You're a pretty serious dude. So, we've been having fun with some memes over here, but I don't like to go too heavy into that. But what do you...
No, look, only reason I was like that back in the day was because Dogecoin was a meme. Because I got famous for shorting Doge. I shorted Shiba. I did really good on Adder. I fucking shorted them basically from the top. All the positions going crazy. But the thing is, I'm not against them. I was just against the premise of people thinking that Dogecoin was better than Bitcoin. And I was like, fuck that, it's not. But actually, I'm kind of sold, because you know what? We're traders, bro, and we need to make money. If we don't care what we're trading, I don't even know half the ticker names. If you buy a shitcoin and it goes from 0 to 100,000x or whatever it fucking is, I can only congratulate you on that journey. You did something which is very difficult. Not many people can do it, and I congratulate you. All you have to do is this: say, get out and have risk, because you don't want to get addicted. Because the smaller the market cap, essentially, the higher the leverage. If it's spot buying, so leverage, you can go on Bitcoin 100x. It's the same as finding something at 100,000.
Which we do not recommend anybody does. Do not use 100x. That is absolutely silly.
But there's a time and a place. But tell me, there is a time and a place. If you use 100x appropriately, there is a time and a place, because it can relieve margin from your account. So I would say having 100x leverage is a benefit for the industry, because you have the option. I know it's difficult for people to sometimes control themselves, but the thing is that people will, I would say this again, people will always cry. If leverage was illegal, they'd cry. If leverage isn't illegal, they'd cry. Everybody will cry about every fucking scenario, bro. The ultimate level here, if the government banned leverage trading, it would be very bad. Okay, I don't think it would be beneficial. I think having it there as an option is beneficial, because it makes, when you lose, you learn. I think people need to understand that. But having 100x leverage for me is quite good, because it means I can have a position open, it runs into profit. I jack up the leverage, the equity gets relieved. I can take another trade. I couldn't do that on plus 500 or a CFD exchange before, so I think that's quite good. Yeah. But
well, I mean, from a moral standpoint on the channel, I'm not going to suggest anybody do that. That is like you really should have some extreme
be a professional,
time under your belt when because I mean, for example, you have you're at 3x, 33%, you're wiped out unless you're adding to the margin.
Yeah,
so that's very.
You can still use a stop loss. Like
do you know how many people don't though? Do you know how many people don't use stop loss?
It's their fault. It's not the leverage fault. It's their fault.
Right.
It is.
Yeah. True.
This is my point. It's a hard reality of it, but I'm saying, look, if leverage is an issue, because if you go and fucking try and fly a plane and you've never done any pilot training, you're gonna fucking crash it. Like, get it. But that's your fault, not the plane's fault. It's not the plane's fault.
Right.
It's the person who flew the plane. So we can't blame leverage for losing money. And at the end of the day, blame yourself. I know this is going a little bit philosophical on your channel right now, but look.
Oh, it's
anything
fine.
In life, anything in life. Let's just say you got wrecked with FTX. Let's say you got divorced. Let's say your fucking son hates you. Whatever it is. Some of these things aren't your fault. But if you have the ability to look yourself in the mirror and say, I don't care whether it was my fault or not, I'm always going to blame myself and have accountability for that. That creates a better society. So I would say, if leverage is there, don't blame the leverage that you lost your money. Blame yourself, because you didn't have to fucking jack it up. And some people like me don't want to be penalized for your mistakes by becoming illegal from you being a twat or an idiot or whatever it is. Look, the idea is just blame yourself for your issues, okay? That's what I'm trying to say.
Right. That is a clip. That is a YouTube short right there. We're putting that one out to the world. That is the motivation of MDX. So, all right, man. So yeah, I mean, I don't want to take up too much of your time. I know you're in Dubai.
I got time for you, man. I got time for you, dude. I got time for you. Honestly,
yeah. So I don't know if there's
I'll show a few altcoins. So Swarm Markets, I think, is really good. Just to say, mate, I do respect what you've done, mate. You built a really big channel. I think your journey, I look at you. You've gone from basically, say, an amateur trader to you've actually really listened and actually took on some stuff. I watched one of your videos and I was blown away, mate. I was like, this is really good content and very valuable content. So I just want to take my hat off to you, mate. I think you've done a good job. I said that to you before, off camera. I was like, just keep doing what you're doing. And like, if you had actually been trading, I think you could have done a good job. But so I
appreciate that, man.
Yeah, man. Honestly, other people have said it as well, so it's not just me. So Swarm Markets is good. I think this one is going to do really well. It's the RWA space. The narratives there. These guys are, I wouldn't say token. The token is the leading. It's not the leading token in price, which is a good thing. So it's lower.
We literally just talked about this. Just so you know, I just mentioned this the other day because ever since Larry Fink came out and he just made that comment about tokenizing things, I just knew that was going to be the narrative. And Swarm has been around. Obviously, I would say they're the OGs in the space when it comes to it. So not trying to like shill it on your end, but like we literally just talked about this. So that's crazy.
Yeah. Well, it's for someone to catch up in terms of the regulatory standpoint and the team and what they've built in terms of the assets they have, which they provide. It would take 2 years for another company to do that right now. So it's they're ahead of the game on that. I think Ordinal's bot, again, really good one. A lot of guys know about that. I've personally invested in that myself. And also, I like prop chain as well. So this is another RWA project, which I was in very early, actually. And it's done really, really, really well. And I want to make one more point, and then, this is kind of something which I could talk for ages on, but I'll just make it really brief. Don't try and chase narratives, guys, as much as you think. Narratives are good, okay? But this here, I've been investing in this for years. I think what's better for most people to do is don't chase the narrative. Just find the shit that's good and wait for the narrative to come to the thing that is good. And then you're going to psychologically put yourself in a better position, because when the narrative isn't there, you get better prices for starters. And if you chase the narratives, you're going to lose track of the value in the project through investing in it. So I would say I say to my guys, I'm not here to chase narratives. I'm waiting for the narrative to come to what I've bought. And the shit I bought was good. So then the propsies, the swarms, the projects that are actually good will likely do well, but sometimes we all do know that sometimes the worst technology could win, like Solana. I don't want to piss off any Solana guys, but bad tech still did very well. But you know my point. Wait for the narrative to come to you is the best way, in my opinion. But Propsy, a good one.
So Propsy is are they another RWA? I think I've heard of them.
Yeah. So it's real world assets. It's doing real estate. But the thing is, they've actually got a really good hold on the Dubai market. So you can legitimately go on their website right now. You can sign up, you can do all your details, and you can go and buy micro fractions of property in Dubai. And this is really strong, a really strong concept, because we've all been talking about this for years, right? Oh my God, like real estate would be a prime suspect for RWA. And what you can do now, you can crowdfund a property you want to build. You can crowdfund a development in commercial. You can go and invest in an already built commercial property. You can go and raise money for someone who wants to build their own personal home. So what you can do is it just fractionalizes out instead of, so let's just say a commercial company, they want to build a big project. At the moment, you got to go to a bank. Pretty much that's it. But now what you can do is you go on Propsy. You could actually do a fundraise of your commercial property from Propsy. It decentralizes out the risk for each individual. You do $1,000, just get 100 people or 1 million people to do $1,000 each, whatever it is, the size, the scale of it. Everyone does $1,000 each. You mitigate out the risk. You get the investment. Everyone then has their own little slice of the pie. So you say 50% of the equity goes to the token holders. So the revenue, the rent, the appreciation. I think it's a massive idea, and I think these guys are on the way.
I think I think, not to cut you off, but I actually agree with you. I think one of the biggest differences that we're seeing this time around is, when we had like the old school DeFi season, it was really just a lot of guys in the space. You had like all these different things like pickle finance and crazy stuff, and it was really not a use case that anyone would really actually. It was just like, we're doing something just to say that we can do it, but there's no real purpose for it. Whereas now, I believe that some of these projects that are actually happening in the crypto space are going to finally break out of the crypto space. And you're going to finally see that paradigm shift that everyone's been talking about for the past 10 years, where now they are going to be the gold standard, where now the tokenized securities, the real world assets, the ownership of, for example, buildings and property is going to be on the blockchain. And that's not going to be like the weird, cryptic, strange internet bros. It's actually just going to be the way that they're going to do things.
I said the
So
VC
that's
thing to you earlier. I think the way companies are funded is going to go down this whole new token system, and VC, essentially Silicon Valley, is going to move into the same funding way crypto projects fund today. And this is happening with Real World. Obviously, BlackRock are talking about this. It's really exciting, man. And I know you've been in this space for a long time. I got in 2016 on the first bull market. That's why I got interested in it. I bought 8 Bitcoin at $600 or something, and that was my whole pill moment. You know, everyone was like, I'm not going back to FX. I'm not trading fucking indices. This is bullshit,
yeah. Once you get into crypto and Bitcoin, you can't go back to the real world. It just sucks you in, man. Like stocks are so boring to me. Just beyond boring.
The only thing that's moved is fucking Tesla, Nvidia, you know, Apple and everything like that. But the thing is, even when they move, you know, there's not other subsections. Like you can go trade the Russell, but it's only doing 10%. There's not like these. There's the diversity of crypto to have a crypto Bitcoin which moves at this level, and then to be able to go down the whole spectrum to the mids, the micros, the tinies, the fucking investments. It's the other funding ways, the liquidity pool provision. It's just so much fucking opportunity, bro. It's amazing.
Right. Absolutely, man. You know, if they could only just officially get the voting on the blockchain, then we wouldn't have to deal with all this situations that we're having here in the US.
Are you a Trump guy? Are you voting Trump or are you voting Biden? What's going on? I bet you're a Trump guy. Come on.
Oh, I will keep that to myself. I think No, we don't know. We don't do politics on this channel, but I think everybody knows. I think if you've been watching this channel, I think you know. I think you have a pretty good guess of where I might be standing. So, dude, we've been talking for a really long time. I know everybody out there. I appreciate your time. You know, we don't want to waste anyone's time. Thank you so much if you stuck around. I hope everybody got some value out of this. But is there anything you want to just kind of leave my audience with before you go, man?
No, man. Honestly, I just you can let's get you on my show, mate. Honestly, I think you're a stand-up guy, honest guy as well. There's not many people like that in crypto, dude. Like, there's a lot of fucking snakes out there. So I would say, yeah, mate, it was good having a chat. I appreciate it, and we'll do it again.
Cool. Yeah, so I'll be out in Dubai next week. Maybe I'll come to your studio and we can chill and do some kind of a lot. Maybe I'll pull up my charts. We'll switch it around and I'll show you what I'm looking at. So
100%.
All right.
So thanks again to MDX Crypto for coming on the channel. Definitely go check out his channel if you're not subscribed. He does a lot of analysis and, you know, he has his own trading algorithm and all this other stuff. Very successful trader. Really, actually, he's one of those guys that I had met a few years back and I learned some things from him as well. And I think that's important in life is you should always be able to learn. You know, don't ever, like he said actually part in the interview, don't get too egotistical. Like, it's okay if you're wrong. Nobody's correct all the time. You know, you don't have to call the exact top or call the exact bottom. And the other thing too, I know we spoke about it in this conversation, but this is a really important topic and I have to say this, okay? So yes, you can use up to 100 X leverage if you know what you're doing. Most people have no clue what they're doing. Most people have no business going higher than 5, let alone 3x leverage. And this is just something that just happened this morning. And this is from Crypto Nerd. He says, just woke up and realized I got liquidated overnight. I was 3x long Pepe. Think about that, just 3x long. But all you need is a 33%, right? Because 33 times 3 is, well, 99. So 33.333 repeating. But he says, I lost everything. I don't even have $1,000 in my bank account. But I had $1 million in Binance. I'd been in crypto since 2017. Today, I lost everything. I feel like, and I'm not going to say that, committing something terrible that, and what he said, I don't want to say it on the channel, but I just have to stress again, guys, he lost $1 million. Actually, I found out in another tweet that Binance only liquidates you up to 83%. So I guess he still has like $180,000. So that's good. He didn't lose everything, right? But even if you did lose it, I've lost $1 million before. Actually, I've lost $1 million multiple times since I've been in crypto. In fact, multiple millions of dollars multiple times. So, like, the thing is yes, I understand this is definitely a little crazy to be going, with all in on a meme coin, with $1 million. That's pretty crazy. But the real important thing is that you can make the money back again. I mean, just to let you guys know, in my first cycle, I was the idiot, right? I was holding my bags for too long. I had no idea what I was doing trading. I was over leveraged. I was sitting in all these shit coins for way longer than I should have been in them. And by the end of the bull run, I had $10,000 less than I started with. And I had gone through the whole thing, okay? It was a life lesson. It sucked, okay? It sucked to lose that all. I mean, it was on paper. It wasn't liquidations, although you know, that has also happened to me at other points in my journey. But my point I'm trying to make is you can always make money back. But, you know, as far as your health is concerned and your loved ones and the community, I know this is like a corny thing to say, but that is never the answer. And if you ever lose money, the cool thing is there's money everywhere. They literally print endless amounts of money all the time. Literally. There are just so many ways you can make money in life, but you got to be here in order to make that money, right? And at the end of the day, you know, you find when you talk to these people, you know, when you're in the come up, right? It's very like, I want to get rich. I want to make money. I want to be successful, right? But I'm going to tell you, you know, it might be exciting at first. You can maybe fly first class. You could buy a watch. You could get your dream car, your dream home, whatever it is. But eventually all those things will not bring you happiness. And I can tell you this from experience because I used to chase those things myself, okay? And now the things that I enjoy is literally hanging out with my friends by the pool, having a drink or something, right? Going out to a movie or a nice dinner, or, you know, traveling to Dubai and seeing some friends at the conference, right? And it really is so much more than that. So I just want to let you guys know, like, if you're going through anything like that, I love you. There's lots of other people here that are, you know, happy to support, and that should never be the answer, especially with something as stupid as money, because you can always get money. There are so many opportunities in this bull run coming up. Trust me, we're not even close to being done. So I just had to say that because I know we were talking about it, but, you know, just be careful. You know, start small, learn from your mistakes. And yeah, I guess everybody kind of does have to lose once. Maybe you got to get liquidated once, right? You join the club, right? And then you can sort of hone in on your experience. And you know what? Maybe leverage trading is not for you. It's not for everybody. Maybe altcoins are not for you. Maybe just dollar cost averaging Bitcoin. You know, everyone has to have their own strategy. So I realized that my rant made this video way longer than it even had to be, but it's something I need to at least mention once per cycle because there's always something like this that happens. There's always someone that just thinks that it's the end of the world, and it's not. It's not. The world keeps on going with or without you, and there's always going to be opportunities with or without you. So you might as well stick around and take advantage of those opportunities while they're here, right? And by the way, that being said, I do think there's going to be a lot of opportunities, especially with these altcoins, which I will continue to talk as we see projects that, you know, are interesting. Obviously, not shilling it. You don't have to buy it. It's just what I'm doing. But at the end of the day, you need to know your own risk tolerance. I'm done. I'm done talking. That's it for me. I've talked way too long on this video. Hope you guys have a wonderful, wonderful weekend. And yeah, Monday should be pretty interesting, right? We're having the markets open. We're having potential ETFs being launched over in Hong Kong. So yeah, I mean, personally, I do think we're due for a correction. I do, but will we get it right now? I don't know. But either way, I'm not worried. If tomorrow we wake up and Bitcoin is down 40%, great. Back the truck up and buy more, okay? If it's not, well, I don't know, keep DCAing or just do your thing, you know? But at the end of the day, there's going to be some kind of a correction. So that's it for me. I love you guys. But, you know, obviously with the correction, I still think we have a long time. I still think we have months ahead of us, regardless if you think shortened cycle, super cycle, doesn't matter. Right now, we're kind of just chopping around right in the middle, right? So that is it for me. You guys rock. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. Oh yeah, if you guys want, you know, check out these tutorials, but now kind of feels weird talking about that, you know, but they do have spot trading. It's not all leverage trading, but again, watch the tutorials. You know, we go over risk management. So that's it for me, guys. Until next time, stay crypto. And of course, peace out.